Aloha! Let's look at the markets for May 26th, 2021, 7:50 p.m. Hawaiian Standard Time. We're looking at the S&P 500. Wow, not too much movement in there today. Now you see my cursor is on one side of the screen. If you go all the way over to the other side of the screen, you're going to see where it says the date. It says open, high, low, close, and then some things about main graph going lower. See that if I move it around, see that information change? Well, we look over there and we see that it opened at 418.87. It got as low as 417.76, as high as 419.61 to close at 419.07. I got to point that out because when we take a look at this candle, not a lot of action there, right? Oh, super thin. Volume is getting light. We do have a bit of a W formation when we pop it over to the line chart. It's a definitely a W formation, but it just not having a lot of strength at the moment. What is going to happen with the S&P 500? Well, me personally, I'm still of the mindset that we are going to break this all-time high. I don't know how much higher we're going to go. I don't know how long it'll take to break it, but we're so close to being around here that I think that eventually it will. With that being said, hey, the market could fall apart. I just don't really think it's going to. What do I immediately see? Well, we're above this range. We are this 417 in some change area. If we keep closing above that 417 and some change, then I would expect we could see this retesting these highs of 422. What does the S&P E-mini futures tell us? Well, it looks somewhat similar, a bit going in this sideways range for the moment. When we look at the line chart, nothing real clean. We had a W here, which went up a little bit. Now it's doing the sideways W possible, but even if it is doing a W, see how this part of the W is not very much higher. It's not looking too bullish. A little bit of sideways, but maybe it's just building some momentum to move up. And since it is Wednesday, let's go back to the S&P. Wednesday being halfway through the week. Let's look at how the weekly chart is moving. The weekly chart is not moving much. This weekly candle does not have much going on. We see the weekly volume is a little low. I would imagine that something is getting ready to happen. You see we're kind of in this range right here, but it's a range that's pushing against these all-time highs. So that would be my guess. If I have to guess up or down, I'm guessing up. And for the S&P E-mini futures weekly, looks a little bit better, but bit of the same. Let's look at gold. Gold is looking pretty good still. We see the 50-day moving average is starting to move up pretty well. The 20-day moving average has been moving up really well. We're still trading above this 200-day moving average, which, if you remember X amount of videos back, I was talking about that, if we get above and stay above the 20-day moving average. So now what we're looking at, we see that Did I say 20-day moving average? I meant 200 if I did. We see we had this big wide range bullish candle here. It crossed over the 200-day moving average. Little doji action. More buyers came in, maintaining this. And then sort of in a sideways pattern here until this candle. And now we might be building a base. So again, staying above 1800 is a big deal, 1880. Now, if we're going to stay above 1900, that's going to be a pretty big deal. The longer, the more days in a row that this can stay above 1900, it starts building a more solid base. And from this 1900 mark, somewhere in this high 1800s, 1880-ish would be our support right here. Resistance looks like I'm seeing the first easy layer of resistance at about that 1920 level. So if you're watching gold, look to see how quickly gold is up against this 1920 area. Is it going to remain more down in the low, very low 1900, or is it going to move up higher towards this 1920? How quickly does that happen, and vice versa? Yeah, that's pretty much. Hope you understood that. The weekly chart is still looking strong. We see that lots of volume coming in, but not a lot of movement in the actual candle. We're going to go back to the daily chart, take a look at the line chart. Kind of got a weak W. It's nothing looking super strong, super standing out. Let's take a look at silver. Silver looks to be in a bit of a sideways range that started possibly back here around maybe beginning of May. Really started in this 26, a little bit less than $27 range, but it seemed to have tightened up. Like, yeah, I get it. Like back here on May 13th and May 14th, it was below this range, but it seems like the real range is around this 2750-ish, somewhere in there. With looks like the top of our range being around somewhere between 2840 to 2850. And we would look to the left, it's pretty accurate from in the past, right? Yeah, seems pretty accurate. So right now we're kind of in the middle of this range between that around 2750-ish, 2740 to 2750 to 2840 to 2850. We're kind of in the middle of that range. So I'll be looking to see, is the price action going to gravitate more towards that 2850 or lower towards that 2750? Let's look at the line chart, see if we can get any clues. Oh, well, it looked like we may have been getting a W. Maybe we will. Maybe we'll get a W out of that. So for silver and gold, there's obviously multiple ways that you can play these metals, and depending on how you're going to play them will make a difference on what you're going to do, obviously, right? So one way that you can play these metals is you can actually purchase the physical item. Another way you could play these metals is you could trade the futures. We're looking at that. Very on the scale of skill and complexity, buying the actual metal takes the least amount of education, the least amount of skill, and actually has the least amount of risk. There's no counterparty risk when it comes to owning an ounce or less than an ounce or more than an ounce of a metal. And what I mean by that is counterparty risk. Let's say you're trading in the markets. Well, you have a counterparty risk of, in my opinion, lots of counterparty risk. Number one, you need electricity to work. Number two, you need your brokerage to not do an MF Global on you. If you don't know what an MF Global is, look it up. And you need things going on in order for you to make money. Maybe a more simple way of looking at counterparty risk is that, let's say you own a rental property. Someone lives in it, they pay you rent. Your counterparty risk is the renter. If the renter doesn't pay you, you don't get paid, right? But with gold or silver or some sort of metal, it doesn't produce anything. It just sits there as a store of value. So there is no counterparty risk to it. Doesn't take a lot of education to buy it. It takes way more education to be successful trading in the futures market on gold and silver than it does to just purchase the actual item. Of course, another way you could play gold and silver is in the equities market. You could be somehow interacting with the miners. You could go with the indexes. There's a variety of things. Let's take a look at the weekly chart for silver. Okay, kind of doing a sideways thing. Exciting, but no real big detail. Let's move over to oil, my favorite. And we see, maybe you can quickly see this range of oil, right? I know it dropped down here for a range, so we got this high of up here, kind of a quick low of around here, and then this another low of around here. Maybe that's somewhat obvious. And what I tend to do quite a bit is I'm watching oil on a weekly chart, a daily chart, a hourly chart, and a 15-minute chart. Each this is the 50-day moving average, 20-day moving average, right? Anything that's red on here is the 50-day moving average. Anything that's green on here is the 200-day moving average. Anything that's blue on here is the 20-day moving average. So I have a setup like this. This is how I watch it to manage the trades that I love doing on this particular asset. So right now, looks like we are riding up against this resistance, which would indicate that there is some potential for us to move higher. Volume right now is a little bit low, super low. Was a little bit lower today. We had some fair amount of volume going in. And for me, the way I particularly trade this for the most part is I'm selling options on this in certain ways that I have a high probability of success, and I absolutely love it. And let's move on to everybody's favorite, Bitcoin. All right, my friends, Bitcoin. Well, I'm sad to say that at the moment it looks as if Bitcoin is just not going to get over this $40,000 point to close there and to continue to close there. We've obviously tested a few times on these various days, and the bulls have come up short and the bears are succeeding to keep that price below the $40,000 mark at the moment. You see on this candle, which more than likely on Eastern Standard Time was the 26th, which is the day I'm making this video for. We see that it opened here, it traded is all the way up to here, but it closed down here, and look at how long this wick is compared to this one. Even though the buyers drove it up, for some reason it's trading on the lower end of this. If we slide over to the line chart, we do have an obvious W here, but the problem with this W is our left-hand side of the W is significantly higher than right hand. That is not a bearish W. It's a very weak kind of W. And you can see we had a couple M's. Here's an M, drove it down. Another M right here. What's going on? I don't know. Is it forming some sort of M type of thing? It's obviously in a bit of a sideways range right now, from kind of around anywhere between this 4250 to 40,000 mark being the high, and the low being of this range being around 35,000 to, I don't know, 31,000, somewhere in there, but 35 obviously you can see a lot there. Now moving up a little bit, so that's good, but we're kind of in the middle, just like silver, we're kind of in the middle of this range. So we will see what happens. But the thing to keep in mind now is days ago, I was watching to see how quickly the price action of Bitcoin is going to be at 50% and basically going to take out this price here around the 44 mark, right? Take out this candle. But now the more days that it's closing below 40,000, that's just increasing the strength of this resistance to the upside. Which, hey, sometimes things blast through, right? Sometimes they do, sometimes they don't, but it's just something to note and to look at. And unless it gets through this 40,000, it cannot go to 50,000 without getting through 40,000. It can't go to 60,000 without getting past 50,000. It can't go to 100,000 without getting past 60,000, right? It seems like it's very simple math, because it is. It's simple. You look at these pictures, and what do these pictures tell you? These pictures are telling me right now that at the moment, for at least this week, Bitcoin is having a rough time really getting past that $40,000 mark. So our weekly chart. So even on the weekly, we see that we're in the bottom. The newest candle is in the bottom half of this last week's bearish candle. Now it does seem that the selling has slowed down considerably for the time being. We see that a lot of the selling started off in 1 week with this long, wide range, long bearish candle here. This candle the body of this was significantly smaller than this, and we obviously have some longer wicks here. So here, not too much, just very decisive selling coming in. This is pretty decisive selling, but not nearly as decisive as this. And what I mean by that is, look, the selling started here. It barely traded. See how that's just a little beep of a wick? It was very decisive for this to sell off. Now, and on this side, hardly any wick there. Just very decisive selling. Here, we had some decisive selling, but not as much as this, right? Because we have a longer, more buying to the upside, but it just wasn't enough. And we see, look at how long this wick is, all the way a little bit past 30,000. But look at all that. Not only is it selling down here, but it's buying coming in here, driving this price up. So it would appear for the moment that the selling has subsided a bit, where looking for some kind of price equilibrium. This week's candle opened exactly parallel with where last week's candle closed. Bad news for the bulls, though, is that even though the price action of Bitcoin traded about 60, 65, 70% into this previous week's bearish candle, the bulls, the bears just drove it back down to here. However, it's still a green candle at the moment. So depending on, again, like the metals, depending on what your trading strategy is going to be, would really determine what you're going to do. It's the same information, right? Just like on gold, it's the same price action, it's the same charts, but there's a lot of different strategies to implement with it. Maybe there's less options with Bitcoin, but there are options. Maybe you're already in a position. Maybe you're looking for a position. I don't know. You know. If you want me to know, you got to reach out and you got to let me know. And if you like that idea, hit that thumbs up button for me. And more importantly, I would prefer you reach out to me so I can help you. If you want to hit the thumbs up button and reach out, good. But if you're going to choose one, let's have a conversation. So that's what's going on for Bitcoin. Did we look at the line chart? Yeah, we looked at the line chart, right? Yeah. Now let's move on to looking at the dollar via UUP. All right, well, not too much of a surprise. We saw around this kind of being a bit of support area, a little bit of a price action moving up, but hasn't been able to take out this candle from 1, 2, 3, was it 3 days ago? And unless it can take out this area right here, so we're kind of around this 24.20 mark, but just a couple pennies up there, 24.20, 27, 24.27. And if it can take that out, maybe maybe it has a chance of making it up to this 20-day moving average at 24.32. We will see, but we see here that when it bounced up to the 20-day moving average, boom, sold off. Tried to bounce up, boom, sold off. So that's what it looks like it might continue to do. What are we looking at now? We are looking at the 10-year U.S. Treasury interest rates, and they are just sort of being stabilized for now. For me personally, these interest rates and the dollar, I watch those. I don't try to trade those. I try to look for ways that these can potentially give me an indication on something. I personally, one reason why I wouldn't trade these is I haven't had much training in it, and I would, in order for me to feel comfortable in it, I would have to have a lot of training, or maybe if I could find a way that just implemented what I believe is to be a relatively fixed market. Now, to some degree, all the markets are fixed or manipulated, quote unquote, rigged, all this type of stuff. There's always something going on, and there probably always has been to a certain degree. You know, maybe behind the schoolyard trading baseball cards and markets, marbles market hasn't been too fixed or manipulated for, you know, maybe that's just the raw capitalism of human beings coming together and trading what they perceive as value for value without any sort of regulation, government manipulation coming in, unless a school board says, no, you can't be trading your marbles, and which I can see happening. But so these things like the currencies, these interest rates, there's people that talk about how to implement those, and I'm just not one of those people at the moment, but I like watching it because people that I learn from watch them. And generally speaking, I think that generally speaking, when you see this rise of interest rates, I don't know exactly what warning it gives you, but when you see it start shooting up, be prepared for something. Maybe you and I can figure it out together. I've heard people say different things, but over X amount of time of watching these, I don't always see it unfold like I'm being told. But I do think it's worth watching, and that's why we're talking about it. So my friends, hit that like button, hit that subscribe button, hit the comment button, hit all these different buttons. Just don't hit the button that has the thumb opposite of up. Just hit that bullish thumb for me. And more importantly, reach out to me one-on-one. We'll have a conversation, human to human, right? Human to human. We will have to do it over some sort of technology, but we will eliminate a lot of stuff, no matter of your age, your whatever, my age, my whatever. We're going to have a conversation, human to human, and we'll see if we can have some synergies and find a way to work together. You guys have a fantastic night, and I hope you're taking massive, massive, massive action to make your dreams come true. Bye-bye.